When you look at a financial chart, a flatline zero growth usually means something's wrong. It feels like failure.
Right.
But today we're doing a deep dive into the UK property market, and we have to ask a weird question. What if a boring flat market is actually a success?
It's a strange thing to say, isn't it? We're so used to house prices needing to be booming, otherwise the whole economy is in trouble.
Exactly.
But looking at all this data, especially for 2026, boring is the prediction. And, it might be the only way to fix things without a huge crash.
Let's ground this in the numbers first, though. For 2025, UK-wide growth was, what, 0.3%?
I mean, that's not growth, that's statistical noise.
And it gets worse in London. Prime London prices actually fell by about 6% year on year.
That's the real headline, isn't it? The era of what you might call automatic appreciation, where you buy a flat and it just magically prints money for you. That's over.
So why is London getting hit so much harder? It's not just interest rates, is it?
No, not at all. The thing is, London has deeper sort of structural issues. It basically ran out of steam first.
Right, because its prices started to stall way back in 2016.
Exactly. The capital just ran out of headroom long before mortgage rates shot up. Prices were completely disconnected from average earnings.
And then you had all the other shocks piled on top.
Oh, absolutely. You had Brexit, you had major tax hikes on landlords, and then international buyers just disappeared.
But what was that drop? It was pretty significant.
Huge. The share of homes brought by overseas buyers went from about a third in 2017, 33%, down to just 24% by 2023.
Wow. So a huge chunk of demand just vanished.
And it wasn't really an accident. Government policy, with things like stamp duty and capital gains tax, was actively trying to cool that investor demand.
So when interest rates finally went up, London had no cushion left.
None. But here's the interesting part, the real pivot in the research we're looking at, the stagnation. It might actually be a feature, not a bug.
A soft landing, they're calling it?
I'd almost call it a stealth correction.
How does that work?
Well, for years, everyone assumed the only way to fix affordability was for prices to crash, a bubble bursting.
Which would be catastrophic for the economy.
Exactly. But what we're seeing is a third way. Nominal prices stay flat, but over time, wages go up, inflation happens.
And the real cost of housing slowly comes down.
Precisely. It gives wages a chance to catch up to asset prices. And the data actually shows this happening.
And nationwide numbers.
Yeah, the house price to earnings ratio for a first-time buyer is now down to 4.7.
And at its peak in 2022, it was 5.8.
5.8. So that's a massive improvement in affordability. And it happened without torpedoing the entire banking system.
Okay, but someone must be losing out here. This soft landing can't be painless for everyone.
No, you're right. It's brutal for one specific group of people.
The sellers.
The sellers who bought near the peak. If you bought between, say, 2014 and 2016, and you need to sell now, you're probably going to lose money.
And the data says almost 15% of London sellers in 2025 sold at a loss.
They are the casualties of this soft landing. There's no way around it.
And this stagnation is breaking the business model for the big house builders too, isn't it?
It is. Their whole model depends on land values always going up. If house prices are flat, their margins disappear, and they just stop buying land. They stop building.
Which is a huge problem when we need more homes.
It's a paradox. But the research suggests this might open the door for smaller, local builders, or even community-led projects that aren't hooked on that massive year-on-year growth.
So to sum this up for you listening, the idea of London property as a surefire way to get rich quick, that's probably done.
For now, yes. It's becoming what it's supposed to be again. A place to live, not just a financial asset.
And that leaves us with a final thought. If a house stops being this magic money-making machine, how does that change the way we think about it?
Does it change our whole psychology of ownership?
If you take away the speculation, do we finally have to start valuing a home just for being a home? Something to think about. Thanks for joining this deep dive.